Hello, Mark here with STR Cribs. In this video, I'm going to dive into our financing offer and try to answer some of the common questions that people ask me when considering using our financing to renovate, remodel, furnish, amenitize a property that they're going to turn into a great short-term rental. And so I'd like to start off by just kind of describing the structure of the financing offer and how it works. It's very much like a line of credit or a department store credit card that you used to get at Macy's or JCPenney. You get pre-approved with one of our lenders, and then that line of credit is only available to use with our services. So you can't go spend the money somewhere else. You can only use it on services that we offer. However, you can use it on any of the services we offer, whether that's furniture, amenities, renovation, doesn't matter. If it's a service that STR Cribs offers, you can use the money from that line of credit in order to cover those costs. It is a personal loan, so they do not lien, mortgage, or tie up the property. However, you do have to own a property in order to get approved, and the monies that are borrowed has to be spent on improving that property. So you couldn't borrow money under the project 123 Main Street and then use those funds for a different address. We have to improve the property that you put on your application, and you have to be an owner in that property. The maximum dollar amount that our lender will lend is $150,000. There are obviously things that factor into that: your credit worthiness, the debt to income ratio, the improvements that we're going to do to the property. But in general, $150,000 is the maximum line of credit available, and you can use as little or as much of the pre-approved funds as you want to. So if you get approved for $100,000, you don't have to use that whole $100,000. You might only improve your property with $50,000 or $60,000, and then that's just going to limit the amount of money that you have to pay back. The next biggest question I get is going to come down to terms. What are the different options available for terms? Now, you don't have to select what option you want at the time of pre-approval, but you do have to make that final selection at your final approval stage after you've purchased and owned the property and before those funds are available for you. And so to make it simple, there's a 12-month 0% APR, same as cash offer. Now, there is interest that accrues from day one, but if you pay it off before the 1 year is up, there's no interest on the loan at all. It's a 0% same as cash as long as you pay it off in that 1 year time frame. That's a very popular option for people that want to improve the property and know that they've got some money coming, or they're going to use the revenue from the property to get that loan paid off. I would not recommend doing that if you don't have a solid plan for how to get it paid off before the 1 year is up, because it's going to be very expensive. The second option, and my personal favorite, and definitely the one that most people lean towards, is a 5-year 4.99% rate. That allows you to lock in a set monthly payment. You're going to make payments on principal and interest. You have no early prepayment penalties, so you can pay it off anytime. That's the case with all of our loans that we offer. And you can stretch those payments out for 5 years using the revenue from the property or any other proceeds that you might have coming in to get that paid off within that 5 years and make those monthly payments. So that's a great option, very competitive rate, and gives you a little bit longer to pay it off than just the 12 months. And then the third option is anywhere from a 10 to a 15-year term. Gives you a lot more time, a lower monthly payment, but it does come with a higher interest rate. That rate is typically north of 10%. It depends on how long, how much, and your credit history that's going to dictate what that rate is. But those are really the three options. You can do the 0% for a year, you can do 5 years for 5%, or you can do 10 to 15 years for a 10+% interest rate. Remember, all of our terms come with no early prepayment penalties. You can pay them off anytime and just pay for the interest that's accrued that you've used. A couple other things to go over. One would be the draw schedule. People often ask, how do those funds work? Do they come to me, then I pay you? And it's pretty simple. The funds are held at the bank level. We will send an invoice to the bank and to you to approve work. Once you've approved that work, let's use an example of a pickleball court. If we send you the invoice for $30,000 for a pickleball court, you get that invoice, you approve it, and then you select, I'm going to use my line of credit with the bank to pay for that invoice. It then notifies the bank to release those funds of $30,000 for the pickleball court, and we can get to work on that pickleball court and get it installed. And so you do have to approve payouts. Funds are held at the bank. They go directly to us. So there's no transfer of money from the bank to you to us. It just goes simply from the bank to us. And that's how the draw and payment schedule works when using our financing offer. The next question I get asked often is, when do I have to start making payments and when does the interest start? And so the interest accrues and the term of your loan starts when you take that first draw. And so let's say that you get approved on January 1st, we start working on the design, we start building out the scope of work, but we don't actually take a draw until March 1st. Well, your term doesn't start until you take that first draw. So on March 1st, when you borrow the first amount of money and you take that first draw from the line of credit, that's when the term starts, when the interest starts, and when the payment plan starts as well. And so know that if you get pre-approved up front, but you haven't taken those funds, it's okay. It's not penalizing you. You don't actually have to start worrying about paying back that loan until we take the first draw on the money. The next question I often get asked is around ownership structure of the property and partnerships. And so we oftentimes deal with people that are working with a partner or two, or maybe an LLC with some people involved in it. And they keep it pretty simple. In order to qualify for the loan, you have to be an owner in the property. And so if you own it with a partner, you own it solely, or you own a percentage of an LLC that then owns the property, that's all okay. You just have to have some ownership stake in the property. And then you can divvy up those funds however you see fit. If a husband and wife are purchasing a property and the husband wants to borrow 75 grand and the wife wants to borrow 75 grand, you can go get 2 lines of credit. It's just they max out the total amount at $150,000 per property. Think of this scenario. You could also then take that line of credit and go buy 2 properties. And one partner could borrow 150 grand on one property. Another partner could borrow 150 grand on the other one. One person, if they're credit worthy, could get 2 separate lines of credit at the maximum amount on 2 separate properties. And so you can kind of mix and match who's doing what, how much they're borrowing, and on what property. But just know that the borrower of the funds has to own the property, or at least a percentage of the property, and the funds borrowed have to go towards renovating and updating that specific property. So you can get multiple lines of credit. You can use multiple people on different projects. That's up to you. If you have any more questions on that, please let me know. And so I hope that was very helpful and informative. Thank you for watching the video. We look forward to helping you on your next project, and we are excited to offer this financing offer and answer any questions that you might have. Thank you.